You're tuned into It's Real Podcast with your hosts, Kayla Calendar and Andrew Yagi. Each week, we'll talk about what happens behind the scenes working full-time in real estate and share with you real-life stories, our successes and failures as we work to help consumers and industry professionals reach their real estate and real-life goals. Here we go.
Welcome to episode 44 of the It's Real Podcast. I'm Kayla Calendar and I'm a mortgage lender.
And I'm Andrew Yagi and I'm a real estate agent.
Hi, Andy. How are you today?
I'm doing really good, Kayla. How about you?
Fabulous. The sun is shining. Finally, it's been gloomy and doomy and it just, I don't know. For me, I talk about this every time we hop on. The weather just like re-energizes me.
Yes. Yeah, it really does. And obviously we've had a little bit of a tougher stretch of weather, but as they say, April showers bring
May flowers.
And hopefully maybe some lower mortgage rates too.
Lower mortgage rates and more inventory. We can only hope.
Right. Absolutely.
Oh,
Kayla, what's going on in your world this week?
This week it is, aside from the fact that, we're seeing a lot of mortgage applications coming in. We're seeing, a lot of energy in the market. It's been a busy week. I actually head out to Scottsdale, Arizona Saturday for a
What's going on down there?
A conference called The Gathering. It sounds funny, but it's The Gathering by Housing Wire. And I think the attendees are somewhere in like the 700-800 range. Real estate, mortgage. Essentially, it's just a ton of amazing minds getting together and sharing insight and, the NAR settlement and, everything that we're experiencing in this market. When you get everybody together, it creates just this fire of energy. And I'm so excited to be around that. It's Sunday through Wednesday next week. So a lot of information coming in, but a lot of networking and connecting and maybe a little sun. We'll see.
Yeah. Awesome. Well, I'm a little bit jealous, although as the weather gets nicer in our area here, it makes me want to leave a little bit less and get out to the lake a little bit. In fact, we were out around Otter Tail Lake just last weekend and kind of doing some cleaning and organizing and everything. Have you guys been out to your place yet?
Yeah, we were out. My husband put me to work last weekend, so we were cleaning and organizing. I saw you guys were too, and you know what it's like. The lake is no longer frozen, and you've got some kind of rocks pushed up. You have to take care of it. But anything worth having requires maintenance, and it's worth it.
It does. And the thing I had forgotten about, but my mom reminded me of, speaking of weather, she's like, boy, we still had winter, April, even into May, a little wintry blast, like we didn't even have spring. So just to be able to get out and get ahead of the game, hopefully get the work done. So when the nice weather comes, one can hopefully enjoy it. And Kayla, I've really seen a lot of people, a lot of individuals that I've been, connecting with over the years here. There's a huge appetite for lake properties. I have more and more people reaching out saying, hey, this is the year. We're hungry for lake property. We're ready to go find us something. The only problem we're having is there's not a lot out there.
Mm-hmm. There's not. And I get your listing emails too. And even I go and look and it's crazy, like the amount of inventory that there is. But I remember when we bought in 21, I feel like we were experiencing lack of lake properties then. And is that because of any certain reason? Is it usually because lake homes are handed down by, traditionally from generation to generation? Or is it just, is there anything else associated with that lack of inventory?
I feel like it's a generational piece, and it's been really interesting as I even look at, my own family and just kind of the history of being like on Otter Tail Lake, for instance, on my dad's side of the family. But then I look at so many properties that are coming up now that, it's been passed down, maybe the mom and dad are either, not living or they're, living in long-term care or just don't want to come anymore. And so then the kids maybe have inherited the property, and there are a lot of people that just really don't love it, or, they maybe want the cash, or, we live in such a global society today too, where people are spread out and like, hey, I'm living in Scottsdale now. Like I'm not going to make it back up here to Minnesota. Like I want my cash out of this.
Mm-hmm. And that's exactly kind of what we're seeing too, is anytime I talk to clients, it's like, even people that have them, it's like, okay, now what do you do? Like, is it paid off? Is there a mortgage? There's a lot more to it. And I think at some point when you are, scattered siblings, it's a lot harder, but I'm curious to see what does pop up. We're going to start seeing more inventory in Lakes area.
Yeah, I think we are. I'm having a lot of good conversations with lake sellers and also some buyers, and actually, starting to write some offers as well on some lake properties and other properties as well. In fact, I've really seen even just this week, quite a bit of activity of individuals that, hey, you know what, it's ready for us. We're ready to make a change. We want to sell, we want to buy, we have this goal. Help us get there. But the other thing I'm seeing, Kayla, is I'm looking at the news a little bit and kind of
Mhm.
looking at Inman, and it tells me that home buyers are rushing to lock as mortgage rates hit new 2024 highs. And,
Yeah.
conforming conventional loans pushed through, 7% last week and continue to rise as latest inflation data and remarks by the Fed chair dim prospects that the
Mhm.
Fed will ease rates in June. Talk about
Mhm.
that, Kayla.
CPI report came out and it was not what we expected. I think when we hear rates rise and things are more expensive, normally people stop spending. The CPI report, consumer pricing index, that's what CPI means. It showed higher inflation. And so in order to keep, inflation down, the result is higher rates to keep people from purchasing. And so at the end of the day, people are still purchasing. And at the end of the day, they're also putting it on credit cards, is what we're seeing. We're seeing trillions and trillions of, of debt that has been acquired on credit. And so what we're seeing is the exact opposite of what we had hoped, and that's higher interest rates. So until we see a CPI report that comes back and it shows that inflation has decreased, we may see rates stay in the sevens. And I believe, I can't remember the exact numbers, but June was the date of, hey, we're going to see some rate movements. There was at least over 50%. Now I know there were chats of it being at 20% that rates will come down. And now July is when we will see. So when we look at this, it's nothing that we could have predicted. Even as lenders, we're like, well, that's not what we were hoping for. And so I say at the end of the day, if you are not comfortable with a payment today, you probably shouldn't purchase today. You have to be comfortable. But if you
Yeah.
are comfortable, you can't play the rate game, because then you have people in contracts and the rates are going up and now they're uncomfortable and they're in contract. And so it just goes to show you that it is so unpredictable and you just can't play that game.
Well, speaking of being unpredictable, I found this as kind of a subsequent article. Instead of cutting rates, what if the Fed raises them? And so
Mhm.
I think I heard a piece of news just the other day, Kayla, that talked about the fact that, hey, we've been eyeing this rate cut, kind of summerish or whatever, but what if that doesn't come? And then subsequently, what if we don't see any rate cuts? And hey, what if we keep seeing, kind of this negative momentum with inflation and we get up into the eights? I was talking to another lender the other day and they were talking about the fact that even they've seen people, you mentioned the credit card debt piece, but even individuals who have a home equity line of credit and
Yeah.
how they were even getting almost to their max
Yeah.
as far as their percentage of debt on their books. Like they were bordering a high percentage of home equity line of credit debt.
It's true. I actually was talking to a realtor yesterday, and she was saying she's dealing with clients that do not want to sell their homes because they don't want to let go of that 3% rate. But here's what I see on my end, Andy, is I see your 3% mortgage rate, but then I see your $50,000 credit card at 22%, your $104,000 HELOC at 9%. And so when we look at where our sellers are at now, they're so concerned about this 3%, rightfully so. But in the big scheme of things, it may make more sense to sell your home, get that massive equity, and pay off those hundreds of thousands of dollars of debt that we are seeing push up. Like we said, that CPI report showed that people are spending. And on my end, I'm seeing it. And so it might be worth giving up a 3% rate to get rid of the 22% rate. Yes, at smaller balances, and then to take a 6-7% rate on a new home. So just a different way
Mhm.
to think of it. It's all about cash flow.
Yeah, absolutely. That does make a lot of sense. Kayla, where are rates at today?
Oh boy. Well, today they're above 7. I remember when we were talking not too long ago, we were right under, but 7.41 for a conforming 30-year fixed. And you'll see FHA is 6.87. Again, these are based on essentially an average of national lenders, but you can see they've pushed up. You see that green minus 0.09. That means that they've come down a little bit since yesterday, but overall, the trend is up.
Wow. So Kayla, is now like if someone like, hey, let's say I'm coming, I want to buy today. Is it a good time to lock right now, or are rates gonna trend down a little bit? Like what's my best play?
You know what I always say to my clients is this: here is the rate today. Are you comfortable? Are you comfortable with that rate today and the payment we talked about? And if they say yes, I say, my advice is always to lock unless I have any other indication not to. And I ask, would you rather lock in and then the next day they improve, like rates come down a little bit? Or would you rather not lock and they go up? What level of risk, where do you want to be? And I will also tell my client, if they come up an eighth or a quarter, it impacts your payment 25 to 50 bucks a month. How do you feel if they do that? At the end of the day, I'm giving it to my client to make that decision unless I have data that day that shows otherwise.
Makes sense. Makes sense.
Mm-hmm.
Okay.
Yeah.
Well, we'll see what happens. It could be a wild ride through the summer, but always, again, like we talked, makes sense to align yourself with someone good, not only an agent, also with a lender. Have conversations early and often, and also like we talk often, good to have kind of a good group of experts and professionals around you, which could include things like insurance, Kayla.
It could. And it's funny you bring that up because today we have a guest that's joining us, Dani Miller. Hi, Dani. Thank you for joining.
Hey, Dani.
Dani is an insurance agent. And Dani, I will let you, I know Dani personally and professionally. She is located in Fargo. But Dani, if you want to just give a little summary to our audience of who you are and what you do, and maybe something personal, that'd be great.
Thank you, guys. Thanks for having me. Yes, like she said, my name's Dani Miller. I've been in insurance for 12 years now. I'm from a small town in North Dakota called Candu. Been in Fargo for 15 years. I live here with my longtime boyfriend, my dog, and my 18-month-old son. So I'm at Aspire Insurance, and it's a 3-man group over here. We've been trying to compete with the market. It's been a hectic year and a half. Yeah. Let's just say that, you guys.
Yeah, it really has been chaotic. And when we think about, Andy says you have to align yourself with experts. And, we think about realtors and lenders, but one of the biggest pieces that is part of a home loan is insurance. And we get the opportunity to work with insurance agents like you, Dani, and I love working with you. And we see like that impacts payment, that impacts affordability, just like your interest rate on your mortgage. And so we are happy to have you here because we want to dive in and ask you a few questions, because we get questions constantly about insurance, constantly, and we're not the expert. And that's why we have people like you.
Yeah, for sure.
One of the things I want to ask you, Dani, just right off I'm just going to get into it. We are seeing, we talked about it just recently, inflation. We have clients that say, hey, my payment went up, Kayla, and I don't know why. And I look and their taxes increased, or a special assessment was added, or their insurance went up. What is one of the reasons, or maybe multiple reasons, why people are seeing their insurance premiums go up lately?
Well, there are multiple reasons, and it's so tough right now because, like you said, we get those phone calls every day of why did my escrow go up? Well, unfortunately, there's been inflation. There's been large losses. We have companies that are pulling out of personal lines completely. There was a company that gave 60-day notice. They're pulling out. Good luck. Find your own insurance, essentially. Wow. Find new insurance. But no, inflation is causing rates to go up. These large losses. I mean, the weather that's been happening the last 3 years is insane. There's an area that had tornadoes that have been hitting out in the lakes area, hailstorms left and right. I mean, it's just ridiculous. The types of losses that are happening in the large amount. It's not just, a hailstorm once a year, it's multiple hailstorms. So what's happening is these companies, they're getting saturated with where they have coverages with homes, autos, everything due to these losses. So they're either putting a mandatory wind hail deductible on these policies, increasing rates, or just pulling out altogether. So it's been a really, really tough year and a half. And I feel for everybody. I mean, I have to advise clients to not file a claim. I mean, why do you have insurance?
Right.
But I have to advise them, I'm sorry, but that $1,000 over your deductible claim is it's just probably not going to be worth it. And I can't predict what rates are going to be, just like you guys can't predict what the market and what the rates are going to be. And I truly wish I could. It would make my job a heck of a lot easier. But I can't. I don't know. I can tell you what the rates are 30 days from now, just because that's what they are in the system. But I can't tell you what they're going to be 60 days, 90 days.
Yeah.
You know, so it's been tough. It's heartbreaking.
Mm-hmm.
It's heartbreaking.
It is challenging. And so, quite often we talk about, affordable housing and there being such a lack of affordable housing. And obviously, despite economic conditions, we've still seen, home values continue to increase at a pretty good clip. But it's not just the price of the home. It is things like we talk often, Kayla, about the mortgage rate. We talk about, things like insurance. And all of these are really working to fuel the fire, to really, make things less affordable than they've ever been.
Mm-hmm. Well, and it's true. It's like, I can quote a client a payment. I don't know for sure what their monthly amount will be for insurance, if it's 150 or if it's 300. And so is there any advice that you would have, Dani, for somebody that's looking to purchase a home today, first-time home buyer, let's say? Is it ever too soon to get a quote? So like, today I have a girl that just sent me 3 homes, all different. At what point should someone start shopping for insurance so that they know what to expect? Because at the end of the day, it's going to impact their payment. What would you advise in that situation?
I would advise to reach out to your insurance agent. As far as getting a quote when you're still shopping, it's so tough. I mean, the standard close date is 45 to 60 days. Well, with insurance, we're not really allowed to quote anything further than 60 days out. So I can quote you those 3 homes, but if you don't close on them within 60 days, your rate could possibly change. Mm-hmm. So it's tough to say. I mean, long are the days where you can get insurance for $800. I can tell you that.
I missed that. Those
long are the days for $1,000. If you have $1,000 home premium and you think your rate went up, you just swallow it, because I'm quoting. I mean, $2,500 is pretty standard. And that's for newer homes. That's not for older homes.
Good to know.
Is there a benefit, Dani? Someone comes and they're really pondering, hey, what should I buy? Something, new construction versus, a nice solid Rambler from the 70s or 80s. Because something's newer, is there a savings in that at all? Or are we looking more at, hey, the value of the home is probably more, so it's actually going to be more expensive?
Yeah, it kind of goes on both spectrums. So yes, if it's a newer home, your insurance is probably going to be significantly less than if it's a home built prior to the 70s. Just like if you're shingles, I mean, that's a huge, if you replace your shingles, tell your agent. I mean, most often in the Midwest, your agent probably knows, because I'm sure you replaced due to a loss from a hail or windstorm, but let your agent know. That can save you thousands of dollars, thousands.
That's good to know.
What about on the topic of, insurance getting canceled? So my wife and I, we had our insurance canceled, and not only a personal, our personal home, but also some other personal property, quite a number of rental properties and the like. And it's like, oh man, our carrier left the state, and here we are. And of course, everything worked out in the end. But we had, one somewhat minor loss, which we filed a claim for. And even we're finding it was difficult to get coverage from different carriers. Talk a little bit about that.
Yeah, so if you have losses, we are having carriers again that they don't want to touch it. And they're not picking on anybody by any means. It's just their loss. They have to control their loss ratio. I mean, they don't want their rates to go up either. So if they have larger loss ratios, well, they have to make up for that somehow. So if you, unfortunately, they are cracking down on losses. I mean, if you have one loss, there's going to be some carriers that are like, bye-bye. We can't look at you, see you in 3 years. And unfortunately, I can't blame them. I mean, I don't want their rates to go up either. Right. So in order for them to control that, there's only one thing, and that's trying to control their loss ratios.
Interesting. What about, like, people always want to know, what are ways that we can save on our insurance? And Dani, you helped my husband and and me with our insurance, and I think even like having a security system, things like that. But what could be something that could save, even when we think bundling like home and auto, what are some things people could do? And again, you've advised me like, hey, if you buy that lake home with that situation, you're going to be paying more. Like, what are some things to like look for, or to just that they can do to lower their premium?
Yeah, so like you stated, security systems, just if there's anything that you can update in your home, and I don't mean just like the cabinets. I mean, if the electrical needs to be updated, plumbing, shingles, things like that, that you can, if you can afford it, obviously. I mean, it's going to be a lot more to update those items than your insurance will be, but in the long run, your insurance will go down. Things like, I remember, Kayla, when you were looking at lake homes, explaining to you, if it's a protection class 10, well, that means that it's further away from the fire department, and it's also has to do with it being a rural fire department. So that's volunteer. And so it's going to take a lot longer for that fire department to get out there, meaning the chances of you having a total loss are a lot higher.
Or I'm like, well, the lake is right there. Can't you just get water from the lake? And it's like, what if it's frozen? And it's like, no, Kayla, you can't do that. So
that will forever be an argument I have with my underwriters. Like, bring a water pump truck. Come on.
Yeah, we can do
It's
that.
right there. I'm sure there's an ice auger if there's winter. Like, don't fight me on this.
Right. Well, even wasn't there something with like a fireplace, like a gas, or there was something that was more risky?
Yeah, the fireplace and wood stoves. Wood stoves are huge. If those aren't installed properly, I mean, even if you have one, they make you fill out a questionnaire. They want photos. Sometimes they'll send out an inspector. Those are tough.
I have another question.
Let's hear it.
Asking for a friend. What is the deal with pit bulls, with dogs that are like pit bulls? Like, why are all pit bulls put in a category? Like,
why aren't all pit bulls? Yeah, I know it's not just pit bulls.
Okay.
No,
I think the issue is that there's this mortgage lender in a rural area who's big on social media, who has a bunch of pit bulls, and there's an underwriter out there that maybe doesn't like them and sees all of her content.
They don't have pit bulls. They're mixed breeds.
You know what? Even mixed breeds are getting categorized. No, what happens? It's just like your vehicle. I mean, not to compare a dog to a vehicle, but they've just had more animal bites with those due to, unfortunately, behaviors. Well, we all know. I mean, not we all, but you and I know it's not the dog.
Right.
It's not the dog. In anything. I mean, I have a 18-month-old son. My dog is half Vizsla, half Red Lab. He's the most timid old soul dog. I still get like hesitant though if Nash tries to crawl on his kennel, his safe place. I mean, unfortunately, you can't. You just don't know. But on that note, underwriters have took it upon themselves to put specific dog breeds in a category where, unfortunately, they don't want to deal with that. But on a positive. Some are just, it's not the dog. They're just excluding animal bites. So they're not saying, hey, you have that dog, you're out of here. It's, well, okay, well, we're just going to do an exclusion to if there is a loss from your dog biting someone else.
Gotcha.
Dani, I have a question for you. So, quite often, we'll get something in the mail as an insured saying, hey, it's time to do an insurance update or whatever, or, call your agent. And I think a lot of people just kind of throw those away, or I kind of ignore them, whether it's something in the mail or email or sometimes even a call. But, I look at it kind of like going to the dentist. They say you should go, twice a year or every 6 months. And even my dentist says, well, it's kind of arbitrary. Like, you probably don't really need to come if you don't want to, but really how often should somebody, end up doing, sitting down with their insurance provider and really going through things and
you cut off.
And reviewing. Sorry.
No, you're fine. No, that is a very good question. And hey, good for you for opening those letters from your insurance carrier, by the way. Because a lot of people don't, and they claim that they don't get certain letters, and I know you did. We all know you did.
I didn't say I always open them, but I do try to open everything.
No, I would say it really that does depend on the consumer. So if going to be somebody that is buying and selling things frequently, twice a year is my advice. But once a year is usually pretty good. And that's not just like, well, I didn't sell a vehicle this year, I didn't do any updates. Well, did you buy jewelry? Do you want to schedule your jewelry? What if you lose that $10,000 ring you just bought your wife?
Mm-hmm.
Did you know that there's a limit on homeowners policies of what they'll pay out for jewelry? And you would have to have a deductible in some cases. You can schedule those on your homeowners policy and have $0 deductible. A lot of people don't think of that. And if you meet with your agent when they're going through, their checklist, that's something on there. I mean, I'm not saying always schedule it. A lot of people elect not to do that, but things like that, you just don't think about, and we don't expect you to think about.
Right. If you're spot on though, and it's like people really need to take the time to meet with these experts. Like Andy, you and I talk about all the time. If you can't take an hour to meet with a realtor or an hour to meet with a lender to really dive in and to talk about your options and scenarios, the same applies with insurance. And I speak from my experience with Dani is I sat down, I asked her questions, my husband asked questions, because Dani was like, well, if you do this and this and this, that can save you here. And it's so easy to just look at the bottom line and say, oh, well, I just want the cheapest. But it's, what are your goals, short-term and long-term, for your insurance? And are you planning to, get engaged? And what fears do you have? And this is just an example of why it's so important to sit down and talk exactly with someone like you, Dani.
Thank you. Yeah, no, I agree. And it goes along with like you use the term cheapest. Well, unfortunately, I mean, I get it. We all want to save money, everybody.
Yep.
But there's certain things you just, obviously we want you to have the best rate, but you need to make sure you're covered properly. And that's not just for home insurance. That goes for auto insurance. Are your liability limits going to cover if you are in a loss today? And are they going to cover? I mean, you get in an accident today. My vehicle, brand new, would have been $70,000. Do you have enough coverage on your auto insurance to cover that? Because a lot of people it's going to be, if they do, it'll be close. It's going to be close. So things like that, just to make sure that you understand of what you're paying for, and you don't want to just go out there and find the cheapest insurance.
Sure.
Because that's not going to come in handy when you need it.
Same with anything, right? Like cheapest isn't better, That's why I don't shop on Shein anymore.
That you don't shop on where?
Shein. Or Sheen.
Don't say that. I have an order coming today.
Okay, well, I had a really bad experience last week, Dani. Let me know how your quality is. So anyway.
I have a trip next week, and I'm really banking on my outfits.
Okay, well, let me know how the quality is. Okay.
Sounds like you better start looking for some plan Bs based on Kayla's feedback. But Dani, tell us, so, we talk about affordability. We talk about, insurance, in some cases up to double-digit rate increases. What are some practical ways, an individual can potentially save money, when it comes to, their overall insurance?
Bundle it together. If you have an auto, tell your agent, because you need to get that. If possible, you need to combine that with your home insurance and get an umbrella policy that extends liability over your home and auto, and it's going to save you. I mean, you'll maybe pay an extra $50 a year to have an umbrella, because it's going to give you that discount on your home and your auto, and you'll have that extra liability coverage.
What is an umbrella for people listening? Can you tell them what an umbrella actually does? Like, they just hear this term all the time.
Yeah, they do. Well, so simple terms is an umbrella goes over your home, auto, boat, whatever it is that you have, and it extends liability. So if you have a $500,000 liability limit on your home and you have a liability loss that exceeds that, your umbrella is going to kick in, and it's going to be, they start at $1 million. So whatever it is that you go up to, your umbrella policy will cover you for that. And we all know everybody's so happy. They all got to make $1. So, and $500,000 unfortunately doesn't get you as much as it used to.
For sure.
Good to know. That's good to know. Andy, any last questions that you have for Dani, or Dani, any questions for us?
Ooh.
Put you on the spot as we wrap it up. A Dani question.
The hot seat.
The hot seat. All right. My question is, in today's market, you guys are dealing with high rates, minimal, the housing market, at least in the Fargo area, Andrew, correct me if I'm wrong in your area. There's certain types of houses that are sitting on the market longer than others. There's ones that are flying off the shelf, one would say. What do you have advice for someone that is looking to buy right now in a market that's not a first-time home buyer?
Andy, do you want
Ladies first, Kayla.
Okay. So what I would say is I really strategize with my client and the realtor. So I would say get your lender, your realtor, and yourself all together. That is where you win because everyone's on the same page. I had a client lose by $1,000 on a purchase because they didn't talk to me and they just were like, we don't want to go higher. It would have changed their payment $6. So I would say my advice would be get together and strategize and find out ways to get your payment down, or maybe you get a seller concession, because there's always ways that you can traditionally work. I was talking to Andy earlier where you might be able to get profit from your sale of your current home. And maybe it doesn't make sense to put it all towards down payment. Maybe you could pay off some higher interest debt. So I would just say get together and strategize with your team from insurance, real estate, your lender, and just talk about those ways. So on a financing piece, that would be my recommendation. But I'll hand it off to Andy in terms of his position.
Yeah, thanks, Kayla. Good question, Dani. Also appreciate everything you've contributed here today. But I think the biggest thing is just early in the process, connecting and sitting down. Sometimes, especially in the lender realm, it's hard to get everybody in the same room. But ultimately, I try to sit down, with my buyers, and we work a little bit more with sellers than buyers. But out of the individuals that are buying, try to sit down to say, hey, what are we really looking for? And ultimately making sure that we're looking for the same house, because oftentimes, and Kayla can attest to this too, and Dani, you can maybe relate in your own life, but sometimes we'll be running around looking at houses and we've looked at 10 and nothing's clicking. Well, at that point, if we haven't found anything remotely interesting, we're probably looking for 2 different homes, or we're looking just to look. And I always tell people as agents, we're professionals, we're experts, but we're not tour guides. It's not our job to come and just take you to look at a house because it looks interesting and because we want to be somewhere. But ultimately making sure that we're respecting everyone's time, everyone's expertise, that we have a good solid plan in place so that we can sit down and we can win together. I think that's really the key to it. And then again, having those experts, that lender, insurance becomes part of it. Sometimes attorney, title company, sometimes getting a CPA involved, depending on what your circumstance is and what you're buying and how you're buying it, but just really having a good plan in place and not approaching it haphazardly.
I love that. Good answer. Thanks for asking, guys. Well, Dani, thank you for coming on and providing so much value to everyone. It's not often Andy and I have guests, and we completely appreciate the time you took today. If anyone wanted to get a hold of you, what would be the best way for someone to reach out?
I would say my email, and that is Dani, DANI, @aspirebanks.com. And banks is plural.
Okay. Sounds good. Thank you for putting that up there. Love it.
Yeah, thank you, Andy.
Wonderful. Love it. Well, I think that concludes today's episode. And we're so excited, Dani, that you joined us. And you guys have an amazing week. And until we see you again, guys.
See you, Kayla. Bye, Dani. Thanks.
Bye, guys. Thank you.